Hi everybody, this is Gary dealing with Sentiment Timing, and this is our technical video report for Sunday, May 5th, 2024. Happy Cinco de Mayo to everybody, and let's get started. So, the sluggish non-farm payrolls and all that came out, that really wasn't good news. The bots are programmed to take it as good news because now they're starting to factor in two rate cuts. And again, I don't believe it has anything to do with these rate cuts anymore. If it was, we'd probably be trading back down near to 4,500, because that's really what triggered this whole thing was, the Fed doing 6 rate cuts this year. Then it went to 3. Then it was they possibly may raise rates to this, bad economic numbers, and now they're back to maybe 1. It's silly. Everything is priced in as far as any kind of rate cuts that are coming. So I don't believe it's that. They're just, I just mentioned in that there's just too many people. The obvious trade was, there's no good news coming out. Why? How can this market go up? And that's typically when they make these kind of moves, because they have the majority that's leaning on the wrong side. They don't have to do much to start triggering a short squeeze. And as everybody's covering their shorts, they're the ones that are selling back to them. And once the shorts dry up, the market goes back down again. So you have to kind of think ahead on this. And long term, as I said, I believe that the Bulls are going to lose this. If they win, and let's say May ends up being a good month, it's still not setting up good for them. Either, even if they make a top in May, or they already made it and we head down, there's, the avenues that the Bulls have right now are pretty limited. And, getting the pullback that we're anticipating, I still think it's, that's in my number one spot right now. And I still believe we're going to come down and test the 4,700 level. That would be the 200-day moving average on the daily chart. And from there, it opens the doors up for a nice rally after that. So, I'm not looking for any, major bear market. I'm looking for a decent size nail biter. And I do believe we're coming. But right now, they gapped the markets up on Friday. The first trade that we made was it was simple, because all we did was sold a call credit spread, meaning that the market can't go above I think it was like 5160, and from there it just went straight down. And I knew there was going to be support at the 5100, 5095. So we just took $500 profit, then took a put side, the credit put side, meaning that I was expecting that these highs were going to get tested again, and that's because we didn't have any sell signals going into this high. So just using history as our, if you look, every high that we made, we pulled back and then made another high that formed a bearish divergences. So this is, it was a fairly easy trade on that one. And then when we got back up into the resistance, I simply put on the call credit spread and had my iron condor and place a stop and left for the day. I didn't even look at the computer because it didn't make a difference. Either we were going to make some money or we were going to break even. And as you can see, this, the market just went sideways. It was another easy, $1,500 trade that you didn't even have to look at. So, Friday was an okay day for us. We did, it was about 2,000, but there was zero stress at all with it, and that's it. So the short term, you're really able to trade these markets, but long term, you're just getting these big swings up and down. But the main thing is that the Bulls did gap above this resistance right here, and they made it right into the secondary resistance. But you can see we didn't make new highs. So I would kind of guess that they're just consolidating, and not guess, it's a technical guess, meaning that they're consolidating right now, and then they're going to pop up and probably test the, right around that 51.55, maybe 51.60. And from there, now we're going to get sell signals on the 15-minute charts. If we look at the hourly chart, hang on one second. Okay, we're actually see now this is where it gets a little, where you have to kind of think outside the lines, because you can see we don't have divergences right now. So the 15-minute is calling for a pop up and then down, because that will if we pop up, that will give us the bearish divergences. And then when we get a move down, I would anticipate that we're going to come down and close these gaps at the 50.92, and I wouldn't even be surprised to see us come down to the 50.60 area. And then that will get this into the oversold levels. It will bring our price oscillator, the momentum, down. And then when we get another pop up, and we may possibly close this gap here, or just get up to the 50.74, and then that will set up bearish divergences. But if we see something like that happen, what's going to happen is everybody's going to get all bulled up again, saying, hey, we're taking out these highs. And like I said, it may happen. It's not on my number one spot. I think the highs are in, but they may do it. And like I said, even if they do that, it's still setting up for, the bears are there. They're not going to be going away. And it's just a matter of, are they going to start pouncing on the market at new highs, or are they going to hold it down now and get a decent little, say backing and filling down to the 4,700? I'm open-minded on that. Like I said, I do believe that the highs are in, but that's subject to change. So if they say the market's going to follow that plan, where we set up the bearish divergences on the 15-minute chart, able to bring momentum down on the 60, come down into the support levels here, and then bounce back up, and that will set up the sell signals on all charts. And as I said, I believe that they're, probably going to make the move to, below the lows that we made at the 49.50. And I'm still looking at the 200-day moving average as far as my downside target, and that's at 47.64. So that's the intermediate term view of things. Short term, the bears, they're going to have to get it through this 5100. To even here, say to 50.91. If they do that, then we're going to come down to the 50.74, possibly even down to the 50.50. If they head higher, I believe that they're going to be sellers at the 51.50, 51.60 level. And if not, then there's going to be sellers at the 51.70. So this is going to be your heavy resistance right here. And this is going to be really your support, is going to be from here. You can even say here, these two spots. So 50.88 to 50.55. If they're able to get through that, that's when I believe are coming down, and we'll probably be taking out these lows. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I will talk to you guys in the morning.